Welcome back to another explainer, so let's just dive right in. Have you ever noticed how in almost any profession, the harder someone tries to look like a hardened, seasoned expert, the less likely they are to actually be one? Well, trading the financial markets is literally the ultimate example of this paradox. Today, we're breaking down what the source material brilliantly calls the professional trader illusion. We're going to unpack this massive disconnect between what novices think makes a pro trader and what actually drives consistent real-world profitability. You know, when people first step into the unforgiving arena of the markets, they almost always put on a mask. They step into the role assuming a true pro has to fit this very specific, almost cinematic stereotype. They think a professional trader absolutely must speak in incredibly complex financial jargon, draw endless, intricate indicators across a massive multi-monitor setup, and wear this impenetrable mask of cold, robotic certainty. But behind that cracked mask, as our source points out, we really have to ask a harsh question. Are they actually making money, or are they just role-playing the part of a trader? Section 1. The professional trader illusion. The trap of sounding smart. Because as you spend more time navigating the markets, a really harsh but honestly liberating reality sets in. The market, it does not care how smart you sound. It doesn't pay you for your impressive vocabulary or your deep, intricate macroeconomic theories, and it definitely has zero interest in how professional your trading desk looks. The market only pays one thing, and that's results. Think about the textbook novice who hides behind complexity. This is the person who will talk your ear off for hours about macroeconomic shifts, liquidity sweeps, and institutional order flow. I mean, they sound incredibly impressive. Yet their trading account is chronically in the red and their risk management is just a total disaster. Now contrast that with the quiet reality of an actual pro. Their analysis is almost boring. It's literally just, we're in an uptrend, I'm buying the pullback. And that is it. No fancy jargon, no ego, just simple, decisive logic that actually pulls money out of the market. Section 2. Knowledge is not profit. The dangerous equation of trading. So there's this deeply ingrained yet completely false misconception in trading that accumulating more technical knowledge automatically equals better trading results. We are all conditioned by traditional education to believe that studying harder equals better grades, right? So we naturally assume that memorizing more chart patterns equals making more money. But I really want to slow down here and let this reality sink in. Knowing more doesn't necessarily mean trading better. The financial markets are absolutely filled with brilliant analysts who can draw the most beautiful, complex geometric patterns on a chart, but who literally cannot execute a live trade to save their lives. You can memorize hundreds of price patterns, read every textbook ever written on technical analysis, and still completely burn your account to the ground in a single afternoon of revenge trading. It really comes down to a fundamental battle between memorization and execution. On one side, you've got the trader burdened with an encyclopedic knowledge of market structure, but who completely lacks the emotional regulation to stick to their plan when real money is actually on the line. On the other side, you have the survivor. This is someone trading with just a handful of incredibly basic rules, but they possess this ironclad, unbreakable discipline. Market survival doesn't come from knowing everything. It comes from having the discipline to flawlessly execute the very few things that actually work for you. Section 3. The complexity trap. Visualizing the chaos of the novice mind. Okay, when the desire to look like a professional completely overtakes the desire to actually make money, the visual results are practically blinding. I mean, just look at this. It's absolute indicator soup. We've got Fibonacci retracements overlapping with 50 and 200 period EMAs, the RSIs screaming overbought at the bottom, MACD crossovers are happening everywhere, volume profiles are stacked on the side. It's just a complete mess of diagonal, horizontal, and curving neon lines. And the crazy part is, a novice proudly posts a chart like this online because it looks wildly complex and quote-unquote professional, but it's purely for aesthetics. It's massive visual noise acting as a smokescreen to hide a complete lack of an actual strategy. So, what is the trading plan? If you strip away all of those colorful lines, delete all the indicators, and just ask that one blank, stark question, the novice is usually totally paralyzed. Despite all that chaotic, overwhelming analysis on the screen, they have absolutely no clear answer on what to actually do when the opening bell rings. Section 4. 4 questions that matter. The pragmatic shift to profitability. Because here's the truth. Real, profitable traders do not want a screen full of rainbows. They want absolute clarity. They use an unglamorous, highly effective, minimalist approach that cuts straight through the noise and deals entirely with risk and reward. It boils down to 4 incredibly simple questions. 1. Am I buying or selling? Make a clear decision. 2. Where am I wrong? You absolutely must know your exact exit point before you ever enter the trade. 3. How much do I lose if I'm wrong? This is strict, uncompromising risk management in action. And 4. Is the risk to reward ratio actually worth taking the trade? Notice how these 4 simple questions completely destroy the need for that chaotic indicator soup we just saw? There's no ego here. There's no attempt to predict the future to look smart. It's just a cold, calculated business process. Section 5. Profit over appearance. What the market inevitably teaches you. Trading is a remarkably strange profession. In most corporate jobs, the longer you're there, the more you boast about your expertise. But in the financial markets, gaining real painful experience actually makes you speak less. You claim far less certainty about what will happen tomorrow. And most importantly, you feel absolutely zero need to prove your brilliance to anyone else. Which brings us to our final powerful takeaway from the source material. Don't try to look like a professional trader. Try to be a profitable one. These 2 goals are very often mutually exclusive. Trying way too hard to look professional with fancy words and cluttered screens usually just makes you look ridiculous to actual market veterans. The true pros, they're quiet, they're disciplined, and they are focused entirely on the execution of their rules. So I'll leave you with this to think about. The next time you open a chart or talk about the markets, ask yourself, are you trying to impress an audience, or are you actually trying to build your account? Thanks for learning with me on this explainer, and I'll catch you on the next one.